I will describe strategy by describing each of the four or three funds that are part of the NSIA. The NSIA stands for Nigeria Sovereign Investment Authority. We've been in operations for just about 11 months. The board was inaugurated on October 9th, 2012, with a mandate to run three funds across slightly different strategies. The first fund is a fund described as a stabilization fund. The second one is a Future Generations Fund, and the third is a Nigeria Infrastructure Fund. At the moment, we have $1 billion of seed capital, which I quite frankly believe, if you contextualize that alongside other sovereign wealth funds at the times when they started, it's not inconsequential. The law as is stipulated, and luckily we have in the room here the finance minister at the time, when the law was written, is such that we have fairly optimistic views as to how the fund will grow over time. So let me describe each of the funds, and then I can tell you where we are, and then from there we can distill what the strategies are. The Stabilization Fund was set up purely to provide stabilization support for the government in times of economic need. And so we have chosen a strategy to invest this in safe liquid assets, and that fund is fully invested now. We have selected managers for that and funded those managers already. The three managers we selected were Goldman Sachs Asset Management, Credit Suisse Asset Management, and UBS. Fairly simple strategy, 25% in treasuries and 75% in investment-grade corporate bonds. Again, remember, the emphasis here is liquidity and safety for that fund. Now, the second fund is targeted at, it's a savings fund that is aimed at achieving a certain returns profile. Again, unlike most other funds, we do not have a specific payout over time. So this is just about savings and accumulating a certain returns target. We are targeting CPI plus 400 basis points return here, and the asset allocation has been published across various asset classes. The one thing you might notice when you look at our initial strategic allocation for this year is a slightly higher weight to emerging market equities than you'll find developed markets. 10% developed markets equities, 15% emerging markets, and this is a reflection of where we see value today. The first two funds, both the Stabilization and the Future Generations Fund, will be outsourced. We're currently in the process of manager selection for the Future Generations Fund, and we're hoping that we can complete that process before the end of the first half of 2014 and have that also fully invested and start looking at performance from that for that fund. Now, it gets more interesting when you look at the Infrastructure Fund. The Infrastructure Fund will be managed in-house, and the reason is very simple. Within the country, we haven't seen that many local infrastructure funds, and we're hoping that the creation of the NSIA will be a catalyst for this sector to grow. We have finished our asset investment policy statements for all three funds, obviously, and we have also narrowed down to the specific sectors where we think the infrastructure fund will play a role. The first sector is in toll roads, where we have seen interesting opportunities in the country. We've also identified power, healthcare, transportation, and aviation as some of the early areas where we think that there is clear opportunities. Now, there are a few things happening in Nigeria which I think you must know. There's been a lot of reform, one of which, obviously, is the creation of the Sovereign Wealth Fund, which I think you should all remember is first and foremost a tool of fiscal discipline. The history of the country through the management of the excess revenues from crude oil has been, not what you will be very, things I think we could have done better. But I think finally, having seen the creation of the Sovereign Wealth Fund, I think a lot of that has culminated in what I think is the first legally accepted vehicle for managing these excess revenues. And I think a lot of work has gone through that, and credit must be given to everybody who worked hard to make that reality. From here onwards, we expect that over time, this will be part of the reflection of all the reform programs that we see in Africa. And Robert, I take your point about what's happening in Africa, but I think I choose to look at it from a point of view of glass half full as opposed to glass half empty. And you're seeing that reflected in things like the yields that our bonds are attracting in foreign markets. The yields are mid-single digits, which were much better than they would have been 10, 15 years ago. So a lot of all this makes us very optimistic as to what the infrastructure fund can achieve. And there are three things I think we expect this fund to achieve. Number one, as the reform program moves into the establishment of PPP programs, we expect to play a significant role there, and that's what we expect our fund to do. Number two, we also expect our fund to be a conduit that makes it easy for some of you who want to invest in Nigeria. You're looking for partners, the NSIA is there as a partner for you. Because we have taken an approach with the infrastructure fund of looking at critical partners we can work with. The first partnership we signed up was with General Electric, looking at power, aviation, healthcare, and transport. That partnership, I'm happy to report, will be resulting in in a couple of areas of investment within the next few months. We also signed up, obviously, with IFC and AFC. You know about that. And then there's a fourth fund here in the US we've just signed up recently. Soon that will be made public. The idea here is we will co-invest in projects with some of these funds, as well as with General Electric in the areas that I mentioned. And I think that provides a template for how many of you that want to invest in Nigeria will invest. The target return for this fund, is kept at the level where I think is still interesting enough for some of you. Is US CPI plus 500 basis points is the minimum return we expect for the areas that we are looking to invest for the infrastructure fund. So I would just say, the strategy is very simple. The investment philosophy here, unlike most other sovereign wealth funds, we've signed up to Santiago principles, which means we are transparent and we're independent in so many respects. There's a law that has set up this fund, which I think in many ways also goes on to guarantee the independence that we are talking about for the NSIA. We view ourselves as a public sector entity with a private sector philosophy, and I think in many ways that's reflecting a team we've built and the way we've outlined the strategies. So manager selection ongoing today for the Future Generations Fund, Stabilization Fund completely invested already, and Infrastructure Fund, hopefully we should be able to announce a couple of commitments before the year is out. It's exciting times in Nigeria. There's been a lot of reform. And again, I think it's easy to look at some of the things that have led to the risk premium rising recently, but take the long view. Take the long view, and the opportunities are really, really interesting. Recently, we've just concluded a significant sale of power assets, one of the biggest privatization programs ever in the history of Africa. And that, I think, so far from the records we see, look very successful. There are opportunities there to invest. Within power, we see specifically areas that are still yet untouched, like transmission, where I think there's opportunity there for investors to partner with the NSIA. So I'll stop here, but I think we're very excited about what's happening in Nigeria, and we're excited about the role that we expect the NSIA to play in the infrastructure investment sector for Nigeria.
Doing business in Africa, you can't afford to be without Africa Investor.